Good afternoon. Today is Wednesday and it's February 28th, and we're into the last second trading day for the month of February. And the time right now is 2:32 in the afternoon. And overnight, nothing really much happened on equities as well as in Wall Street generally, because last night, despite the release of the durable goods, which came in weaker than expected, this is very much in line with what we saw in retail sales last week, where the retail sales also did to a weaker level than market expected. So basically right now we have on hand, since the middle of the month, we have numbers that come in that suggest that US economic activity has slowed down, as evident by the retail sales and in durable goods, as well as elevated prices in the form of CPI, PPI, and going into tomorrow, we will also have the personal consumption expenditure. So we're going to expect PCE to be a little bit sticky, just very much like the CPI numbers. So this is actually at the back of every trader's mind. Will the Federal Reserve delay the cutting of interest rate in the face of elevated prices, and also those who has been clamoring for an earlier rate cut can now use the slower retail sales and durable goods to actually campaign for, or rather urge the Federal Reserve to actually bring forward their interest rate cuts. So right now we have two forces. They are not necessarily incongruence. We have elevated prices, which suggests the Federal Reserve may not be in a position to cut rates anytime soon. And the other one is that we have obvious economic slowdown, which justify an early rate cut. So both forces will have to fight it out, and the Federal Reserve will have to make its decision very, very soon. But most likely, we are not going to get any kind of changes in monetary policy in the upcoming March FOMC meeting. So we can see the equity market right now is in the bit of a flux after trading to the all-time high last week on the back of a blockbusters and Divios share price. We can see that the Dow Jones has already peaked at 39,285.17 and is currently doing what we call a technical pullback. And we can see that the pullback has actually gone down to as low as 38,877 and currently is trading at 38,926.38. So will the market dip further, or will the market recover from here and go all the way to the new all-time high? So I think the market sentiment is that I think the general bullish trend has not been damaged. We are likely to see further losses, at least in the near term, for prices to come off a little bit. The near-term target is for the Dow Jones to actually dip a little bit lower to test the 38,800 range. If the market can hold at those levels, and then there's a good chance the market may rally again. So if the market do rally beyond 39,285, the immediate target is at 39,500. That would be in the Dow Jones. What about in the S&P 500? Now, S&P 500 is also pulling back a little bit, although the pullback has been a lot shallower than what we saw in the Dow Jones. We can expect if there's going to be any further losses, there's a good chance the market may actually test the 5,020 levels. And if that level can hold, well and good, and the market may be poised to recover and resume its rally beyond the 5,110.75 all-time high that we see. Immediate target, at least for now, will be 5,188. So this will be for the S&P 500. In the Nasdaq, we can see Nasdaq has very little pullback. In fact, it has gone flat, okay? After trading to a height of 18,096.45, the market has gone flat. And if there's going to be any kind of pullback, it will be equally shallow, maybe not as much as the 17,700 that everybody was talking about earlier on, maybe even lower than that. So maybe we will have to watch for sign that the recovery may first occur in the Nasdaq 100. And if the market blow above the 19,096.45 high that we've seen so far, the immediate target is about 18,280. Okay, so this is for US equity market. What about in Asia? Now, Asia is also taking its lead from Wall Street. We can see the Nikkei actually topping up at 39,635.38, which is a new, fresh 35 years high. The market has gone flat, but there is hardly any profit taking that we can detect so far. And if there's going to be one, I think there's a good chance if the market can pull back to anywhere around the 38,000, that could be a good level to actually pick up some more long position. If you still believe that the bull market is going to be continuing, okay, then if the market do take out the 39,635.38, immediate target is about 40,500 levels, which you can see over here, okay? And in Hong Kong seems to have hit a pocket of resistance. We can see the prices has been trying to go higher beyond 16,886.5 that we've seen this morning. We have in the time and currently has failed to go beyond the 16,886.5 and is coming under profit taking. There is still hope that the market may still rebound higher, because in my mind, although the market has already done a three-wave equality move at 16,735.4, which the market has exceeded, there is still the scope that the market may go even higher to test this high here at 17,171. So either way, I think the market may have already run the bulk of its course. So the market right now is actually quite vulnerable to resumption of the longer, bigger picture downtrend. So don't forget that the Hang Seng has been in the bear market for quite some time. In fact, the whole of last year, we have seen prices has been coming down month after month. And this is the overbearing dominant trend that is dictating prices. So if the market recovery from the most recent low at 14,776 ends, anywhere just under where we are seeing right now at 16,886.5, then perhaps market may resume lower, with the possibility we may see lower prices going forward. Okay, so right now, this is the outlook. In the dollar index, we can see dollar has started to come alive this morning in Asia. We can see after flatlining for quite some time, the dollar index appears to be looking to go up. Okay, we can see this morning there was a minor move to 103.89 levels, with the possibility we may see further gains later on in London. London could open up in about an hour's time. We can see that the buyers right now, I think the momentum, short-term momentum, can actually carry dollar index a bit higher to perhaps 104.25 to 104.30 levels. Now, this will be a crucial level, in my opinion. The market cannot rally beyond here, then I think it is quite vulnerable for another decline below the 103.31 low that we've seen last week, or rather this week. So we can see that the immediate target is for the market to dip to as low as 102.70 to 102.90. Okay, so this will be the outlook for the dollar index. Conversely speaking, we also expect the currencies to actually benefit from the pullback in the dollar index if one actually comes about. Right now, we can see the euro dollar is trading at 108.25, and if we see further pullback in the euro dollar, perhaps to 107.60 to 107.85, that could be a good area to pick up some more long position for the extension of this recovery that we see here in the middle of February. We can see the immediate target is about 109.85. Okay, and in the sterling has already hit its target in my opinion. We have this three-wave bounce here, the hit equality, and with a high at 127.09, that could have already completed this sequence of events, and the market is probably vulnerable to the downside, as evident by the most recent downtick to 126.57 as we are speaking right now. And if this thing continues, there's a good chance the market may test this 125.18 low that we saw in early part of February. In Aussie, the Aussie is coming down a little bit, but I think generally speaking, I do not believe that recovery that we have seen so far is over. There is a good chance that the market may not break the 0.65 levels. And if that's the case, I think there's a good chance for the market to rebound. And if it does rebound, the three-wave equality could be targeting 0.6650 to 0.6670 levels. In dollar Canadian has also benefited from the general rise in the dollar index. The sentiment seems to be favor further gain in the dollar. The dollar index, as it is right now, is trading at 135.50 thereabout, with the possibility that it may extend higher to challenge the 135.85 high, perhaps into 135.65 to 136.25 levels. So this could be a one catchment area to watch. If you are going to be long, maybe this bracket of prices could be a good level to take some profit off the table. Now, dollar yen is still very well bid, although the fear is that the Bank of Japan may intervene anytime soon. But for now, the market doesn't want to come down. I think the speculators has been of the mind that I think the Bank of Japan is caught between the rock and a hard place. Maybe it has not much room to move in terms of monetary policy, because they cannot allow interest rate to rise, because that will blow up the national debt. So I think for a time being, speculators is of the opinion that the Bank of Japan is stuck and may not have a lot of choices to deal with the weak Japanese yen. So that may be giving the speculators the conviction that maybe we can see higher prices in dollar yen. But personally, I'm always very, very wary, because I have witnessed many a time when the Bank of Japan intervened, it can be a very hairy experience. The last time they intervened is just under the 152 levels. So right now, if the market pops above 151, it will get into that danger zone whereby we have to really, really watch for sign that the Bank of Japan will intervene. Okay, so if I have a choice, I'm going to step aside and not take any position in the yen position in any composition, whether it is the crosses or in the outright. So in metals itself, you can see metals has been, especially for gold, gold has been sideways, a little bit more to the upside. We can see that the overnight gold prices has been quite stable, currently trading in Asia at about $2,031.20 thereabout, and it has increased by just over $1. But I think the market has the potential to pull back a little bit, and if one actually happens and to $2,008 and to $2,010, that area will be a better area to actually consider accumulating more long positions. I've always maintained December will see a low in gold prices. Perhaps the low is already in at $1,984.13. So going forward, I think we're going to see progressively higher gold prices as the geopolitical situation in Europe escalates. Okay, so do watch out for that over the horizon. In silver, I think silver is coming very, very close to a point whereby we will have to be on the lookout for reversal signal, trading to a low of $22.37 this morning. I think the downside is quite limited, in my opinion, provided the market do not take out $21.86. I think there's a very good chance over the immediate to long term. I think there is a good chance for the case to buy silver, because I think silver is due for a big move in 2024 going into 2025. So I think this year, I think the low could be already in place at $21.86. In crude oil, you can see crude oil managed to trade on a upper end. We can see that overnight, the OPEC Plus, led by Saudi Arabia, has again affirmed that they're going to cut production going into the second half of the year itself. So right now, we can see oil prices has been a little bit elevated, traded to a high of $79.09. And currently trading at $77.67. So we can see the potential is for the market to go higher, but again, it has to take out this level of prices, ideally above the $79.78. And if the market can close above the level, then obviously the sentiment in the 4 hours will turn bullish decidedly. Then what we need to do going forward will be to look on pullbacks, and then if we do get pullbacks, to look for a chance to actually go long. For the time being, the area to look for a long will be somewhere around $75.50 to $75.75. But it does not look like it will come this round. Okay, let's see if the market want to test the upside, how much of a resistance we're going to see in the upside here. If the market can punch beyond, like I said, $79.78 convincingly, then of course every pullback will be a buy. Okay, and in Bitcoin itself, Bitcoin has been struggling. We can see overnight the market actually burst beyond the 57,000 level for the first time this year. In fact, this is the first time you ever you actually take out this level since I think going back to February of 2021. So we can see that Bitcoin is definitely very, very beat. Of course, this can be understandable because we are going into the halving event, which is expected to occur in the second half of April. So this is not that far away. So typically, Bitcoin prices tends to rally going into the halving event. So do watch out for further gains in Bitcoin. And if we do get any kind of pullback, that will be a level to watch out for buying. So this area here that I see here, just before the flush happens, this could be one good area to consider accumulating a long position if and when the market pulls back. That level is about 51,000. So as the market do pull back, if it pull back, then this could be a good area to consider going long. Okay, this is all I have for you. Now remember, tonight we have the third and final reading of the Q4 US GDP numbers. The last number was up 3.3% for Q4. If there's no major change to that number, it will not have any major impact. However, if the number is revised either upwards or downwards, it will cause volatility to spike in equity markets. So the big one to watch out will be for tomorrow, the PCE numbers, which is the personal consumption expenditure number, which the Federal Reserve also watch. Okay, this is all I have for you, and I wish you all the best in your trading, and I'll see you tomorrow. Bye-bye.